All right, guys. Good morning, good afternoon, good evening. Depends on where you are connected from. My name is Emmanuel Adegbola, and I want to welcome you to today's class. This is supposed to be our Q&A session, but today we'll be focusing on Tradermatic, and we'll be focusing on what I call CEST strategy with Tradermatic. So this training is for you if you are one of our Tradermatic users, if you happens to or you plan to use Tradermatic, and even if you are not using Tradermatic right now, you can still apply the strategy, everything we are going to be talking about today. You can apply it to your trading. It doesn't matter whether you are using Tradermatic or you are using FX Sniper or you are using Naked Chart. It doesn't matter. Whatever you are doing, all what we'll be discussing today will also be applicable, even though we are going to be focusing more on Tradermatic. So once again, I want to welcome you, and the goal is to spend about 45 minutes, 1 hour together today. So let me ask you this question. So out of all of you connected right now, how many of you are using Tradermatic actively? You are using Tradermatic actively. If you are using Tradermatic actively, that is, you are trading with Tradermatic. It could be demo account, it could be live account. Go ahead and type 5 on the chat window. I just want to, look at let's do sample of what we have so that I'll know, okay, if what we are discussing is relevant. Okay, Tayo, okay, Techno, okay, good. So you are using Tradermatic right now. Okay, thank you so much. So if out of all of you that are connected right now, is there any of you that doesn't even know what we are talking about? Like, okay, what is Tradermatic, or what are we talking about? Is there anyone? If you are in that category, okay, could you type 7 on the chat window? Can you type 7 on the chat window? Maybe, okay, you are with us right now. I mean, you are one of our students, but you was like, okay, what is this Tradermatic you guys are talking about? What is it? So if there is anybody in that category, can you type 7? Could you type 7 on the chat window? Okay, Tunde, okay, okay, so, okay, that is Tunde right there. Okay, then who again? Okay, so just for you to know, Tradermatic is one of the softwares that we use to trade. As you can see, that is Tradermatic right there, and that is my baby. Actually, I developed this, and it started from Cryptomatic 360, and of course we rebranded it to Tradermatic. And of course, I've been using this now for like 5 years. And we've gone through the first update, second update, and I think we have the third update. So that is what we use. Is a trend trading system. Okay, it's a trend trading system. There are different systems that you use to trade, but when it comes to Tradermatic, it is a trend trading system. And I'm going to be sharing my screen. It is a trend trading system. So we will not be going into how to install, because there is enough training about that in the members area if you are one of my students. So it's a trend trading system in the sense that it helps you to be able to detect the trend. And once you discover the trend, and you just ride the trend. Okay, imagine if you are trading like this and you are able to pick this kind of a trend and you ride it. Or imagine if you are able to pick this kind of trend and ride it. So that is what Tradermatic is all about. And when we start talking about the component, the indicators that makes up Tradermatic, then we'll start looking into the Ekinashi candle, which is not a regular candle. It's an irregular candle in the sense that with this Ekinashi, you can predict what will happen next. So let's say you are working on daily chart. Once you are working on daily chart, and the next candle or the new candle is printing at the beginning of a new day, do know that candle, the color that it shows, that color of that candle is telling you the direction that the market will go the following day. I'm using daily now. So if it is 4 hours, by the time the new candle prints, it's telling you at least over 70% chances that this market will go this direction. Do you guys understand that? If you understand that statement, type 1 on the chat window. I decided to mute you guys because some people just have noise in the background. So, and that is why we will be using the charts to communicate a lot. So let's say you are working now on the 4 hours. Okay, the moment this candle, okay, is printed and it prints the new one. So if the new one is red, it therefore means that there is 70%, over 70% chances that this market will go bearish for that next 4 hours. And if it prints blue, based on the color you chose, it shows that for the next 4 hours it's going to go bullish. So that is why we use echinacea with this. Then we also have what is called the Alahor moving average. This moving average is not like the regular moving average that you know. It's not a simple moving average. It's not exponential moving average, because those ones are lagging. But these ones here with a special configuration, it kind of takes care of so many disadvantages that moving average has. Then we have MACD Pro. This MACD also helps us, and we are going to be looking into all of this one after another. This MACD lets you know, okay, what is going on. Is the market, you know, changing direction? Okay, and of course we have the stochastic. You can decide to remove one of these. You can decide to use stochastic. You can decide to use MACD, but I like to use 3 of them the way it is. Then we introduce this 50 EMA. This 50 EMA just serves as filter. Okay, you can decide not to use it, but then I like using it for what I call the perfect entry, which we are going to be talking about today. So without any further ado, let's get started. Once again, this session, this training is for you if you are using Tradermatic already. If you are not using Tradermatic and you plan to use Tradermatic, it's good for you. And if you are using any other system, you can still apply what we are going to discuss today in that system and then begin to make that profitable for you. So are you guys ready to look into what I call the CEST strategy with Tradermatic? CEST strategy with Tradermatic. Are you guys ready? If you are ready, type yes, I'm ready. Yes, 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 I'm ready. Yes, I'm ready. Sometimes it looks as if I'm talking to myself when I'm the only person talking, but then just to avoid noise, that is why everybody is muted. So we're going to be looking into CEST. Okay, and let's start this way. You see, whenever you are trading, you must have some rules in place. There must be a rule that you have in place. You know, let me ask you, how many of you saw the market is going up and you decide to buy, and immediately you put your buy order in place, the market immediately goes against you? How many of you have experienced that before? I have. How many of you have experienced that before? Just say I have. Just type 3 on that chat window. How many of you have experienced that before? Yeah, it happens all the time. It happens all the time. Or the market is going down and you have a very perfect entry and you put in your order for short position to sell, and just immediately after you enter that short position, the market goes against you and starts going up. How many of you have experienced that also before? Yes, I have experienced that. And that is why we're going to be discussing this today. That is why we're going to be looking into, you know, what I call the CEST. CEST. So what does this stand for? Number one, the first one stands for condition. Okay. This will help you to be disciplined, to be a disciplined trader. What are the conditions that needs to be in place before I enter this trade? So this will help you once you have this checklist in place. So before you buy, but before this, remember that we have two types of trader. We have two types of trader. We have what is called spontaneous trader. This is my English. This is how spontaneous trader. Most of these times, most of these ones, they don't have any rules. They just enter trading. They just enter their trade, and more or less what they do is gambling. Then we have what I call the rule-based traders. These ones have rules in place. Okay? And this uses CEST that we are discussing. The spontaneous traders, most of these people, they are scalpers. You just see, oh, the market is going up, boom, you buy. Oh, the market is going down, hey, you sell. And the market goes against you, you lost. So, but when you have some rules in place, of course, when you are building your own system, when you are using a system, it's possible you are not using Tradermatic. It's possible you are not using FX Sniper. It's possible you are not using Tradermatic 360. You decide to build your own system. It can be a simple moving average crossover, maybe 8 and 21 moving average crossover. And your rules will be, okay, when this crosses this is what I do. When this does not happen, I will not do this. So once you have that in place, it begins to help you. Are you guys with me at all? If you are with me, please type yes, type yes, type yes, just to be sure that you guys are with me. Just to be sure that you guys are with me. Okay, awesome, awesome, awesome. Thank you. Okay, good. So our C stands for conditions. What are the conditions that you need to have in place for a trade to take place? What are the conditions you want to buy? What are the conditions that needs to be in place? If one of them is not in place, I'm not going to place that trade. If you can do that, that will begin to help you to be disciplined, to be a disciplined trader. So C stands for conditions. E stands for entry. So we have the conditions, we have the entry. What must be in place? What are the things that needs to be in place for me to place a trade? That is the condition. Then the situation that must happen for me to enter a trade is the entry. What is the trigger? What triggers my trade? That is the entry right there. Then the S is for my stop loss. Guys, I cannot overemphasize why you must use stop loss in your trading. And get that from a guy that have lost a lot of money to this market because I did not use stop loss. I did not use stop loss. If I have to, if I have to do it all over again, guys, I will put stop loss to my trade. I mean, we'll talk more about that. Stop loss helps you to be able to, you know, to safeguard yourself from serious loss. When you are a trader, you know, I've discovered that many people that burnt out their account, that lost their account, that developed trading apathy, did that because of lack of discipline. And that does not exempt me. Lack of discipline, because when you are disciplined, you will do what it takes. And one of them is this one, stop loss. Especially in the situation that we have, where market is so volatile. The market is so volatile, but you don't have control over what you're going to make, but you have control over what you are willing to lose. And that is why we always say, that you don't trade or invest with money you can't afford to risk or to lose. So we're going to talk more also about this. Then the T is the target. Sometimes you can enter a very good trade. You put a stop loss in place. If you don't know how to set your profit target very well, you can still lose money, because market can come and hit where you're supposed to have taken profit, and you do not take profit, and the market reverse again and started consuming all the profits that you already have. So that is what we are going to be discussing today. Once again, C, E, S, T. C stands for conditions. E stands for entry. S stands for your stop loss. And T stands for target. So this is what we are going to be discussing today. I want to be sure we are all on the same page. Are you guys with me? If you are with me, type yes. With you, type yes, 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 yes on that chat window. Type yes, yes on that chat window. Please type yes on that chat window. Type yes on that chat window if you are with me. Okay, good. So let's start from the conditions. Let's start from the conditions. Let's go to our chart. So let's see. This is Tradermatic. Now I want to buy. Let's look for a condition to buy. Number one. So remember, we are dealing with what? First, we are dealing with, that is C, E, S, T. So we are on the condition now. So we are dealing with condition. So the C, for you to buy, number one, the price must be above this 50 EMA. That is one. Once the price is above that 50 EMA, you know, okay, we have uptrend. Once the price is above that 50 EMA, you know we have what? We have uptrend. That is number one. The trend, that is one. The price must be above the 50 EMA. Number two, the candle must be bullish. That is, this Ekineshi candle must be bullish. Number three, your MACD Pro must be bullish. And we will explain all of this. How do you know when MACD Pro is bullish? This, for instance, if you have it as a green, can you see that color? Green going up or blue going up. That is bullish. It could be less than zero. This line for MACD is zero, but below it you have all this candle. So once you see like this green right here, this one here, you can't call this particular one that is bullish because it doesn't tally. You can see this one going down, why this is like this, so it doesn't tally. But when you look over here, you see Stochastic is bullish, you see MACD is bullish, and you see this is bullish. So you can see three of them now. That's what is called congruence. We call it congruence in trading. So number one, our price must be above the 50 EMA. Number two, the candle must be bullish. Number three, the MACD Pro must be bullish. And number four, the Stochastic must be bullish. Let me take okay, number one. Yeah, let's use this. So we have CEST. So we're talking about condition to buy. In Forex, we call it to go long. Let me increase the font size. Can you guys see my screen very well? Can you see my screen very well? Okay. Can you see my screen very well? All right. Okay. So now we said number one, condition number one to buy, price must be above 50 EMA. So once this happens, you know that you are, let me zoom this one. Let's increase this. Let's increase this. Okay. Okay, good. So number two, the candle must be bullish. So you begin to ask yourself questions. You have this checklist in place, and if this checklist, one of them is missing, then you begin to question, should I enter this trade? Then number three, MACD Pro must be greater, okay, must be greater than 0, or in other words, bullish. And I will explain that. Number four, stochastic must be greater than 0 also, or sorry, greater than 20 and less than 80. In other words, we put that also bullish. So this is condition to go long. So once you have these four conditions in place, then you begin to look for opportunity to go long. Number one, the price is above 50 EMA. Number two, the candle is bullish, and you might even have the box is bullish. But sometimes you might enter the trade before the box begins to form. Then number three, MACD Pro is greater than 0. MACD Pro is greater than 0. Then number four, stochastic is also greater than 20 and less than 80. Let's quickly take a look at what that means. So in this situation now, if I have this trade, I can't enter buy in this place because anything could happen. Why? Because the price is below this. But looking at this place, I can decide that, okay, you know what, I'm going to enter my buy right in this place. Why? At this place right now, the price is above the 50 EMA. That is number one. Then number two, you can see the box also is bullish. You can see based on our color right there, the box is bullish. The candle is bullish. Then number three, you see stochastic also forming. MACD Pro bullish, that is above 0. Or sometimes it could be below 0, but you see it is going up. Okay, and I will look for more example. Then number four, the stochastic is above. This is 20. This is 80. So when it is above 20, you are looking for opportunity to buy. So once that condition is in place, you know that, okay, this looks like a buying setup. That looks like a buying setup. So do you guys understand that? If you understand, type yes, yes, yes on the chat window. I'm going to enable you guys to be able to interact with me as we go so that you ask questions. But please, I want to beg you. If you have noisy background, just mute yourself. Okay? Just mute yourself. Let me see. Okay, so if you have any question, you should be able to ask your question as we go along. If you have any question, please feel free to pause me and ask your question. Okay, so let's continue. So we have the condition now for buying long, going long. we have the condition for going long. So let's look at the condition to go short. So the condition to go short, okay, the condition to short, that is to sell. So number one is just opposite of this. You can just copy this and replace over here. So the price must be below 50 EMA. The candle must be bearish and the box is bearish. MACD Pro is less than 0 or bearish. And stochastic is less than 80 and greater than 20. That is bearish. So this is the condition to go short. So you have the condition to go long here. We have the condition to go short right here. So let's take a look at our chart. So in this situation, number one, let's take a look like this. So you see a graph, or you see a chart formation like this. The first thing, the price is below. This is the 50 EMA. So the price is below. Do you see that? The price is below 50 EMA. Even here, the price is below 50 EMA. So the 50 EMA is above it. So that is number one condition right there. Then number two, you see your MACD Pro is, this is 0. So your MACD Pro also is what? Is bearish. You can see it is less than 0. Then number three, the stochastic is less than 80. As you can see right here, even though it's, this place is flat. And sometimes don't be deceived by this overbought or oversold of stochastic. Don't be deceived at all. Just focus more on this and MACD. Stochastic is just for thought confirmation and to recognize overbought or oversold of a particular instrument. So in this case, we have the price is below 50 EMA. The candle, of course, you can see that is bearish, it's red. The candle is red. Then number three, we can see MACD Pro, of course, also is bearish because it's less than 20. I mean, it's less than this 0 line. Then number four, we can see that stochastic is definitely less than 80. So this is the condition to go short. That is the condition to go short. That is the condition to go short. So now you are looking into CEST. We've taken a look at the conditions. Any question on that so far? Any question on that so far? Any question on that so far? Okay, we are good with that. So we are talking about CEST. So we've discussed the condition. Okay, once you see the condition, am I buying? Am I selling? Now remember, I'm not looking at the types right now because the type of trader you are also determines. If you are a day trader, then you can begin to look into the Currency Meter Pro. There is a different strategy with that, which we discussed, and of course we have it in the members area. If you are a day trader, day trader means you are trading on 5 minutes, you are trading on 15 minutes, a maximum of 1 hour. Then you put this into consideration also. Because if I want to buy, if I'm buying, definitely I will look into my currency strength. Which currency is strong, which currency is weak. But this condition that we have in place right now, this condition is addressing any type of traders you are. So before you buy, you want to be sure that, okay, you have your price above 50 EMA. 50 EMA is a medium trend. Some use 20, some use 100, I've used 20, 21, 8, but I think for a very long time I've been using 50 and it works good for me. So the candle must be bullish. You cannot be, especially when you are using Tradermatic, the candle is part of the system because it's predicting the movement for you. Ekinashi candle will predict the future movement of the market for you. MACD Pro, once you see MACD Pro, is telling you, okay, I mean, you can see right there, it's telling you, okay, this market is going to start going up. And Stochastic also is telling you the same thing. So once you have that in place, you know the condition is fulfilled. Once that condition is fulfilled, then you move to the next stage, which is the entry. Which is the entry? You can have all the conditions in place. If you don't go to enter the trade, you might still not place a trade and you might still lose. So when you are talking about this entry, now remember, you can decide to trade on a single chart, and you can decide to trade on multiple charts. Single chart means that, okay, for instance, I'm on 0 AUD right now. I can decide to place my trade here once I see all those conditions. And if I want to use multiple time frame, that is when I start looking into the factor of 4 or 6. So I do my analysis on 1 hour, then I can go to 15 minutes to place my trade, or I do my analysis on 4 hours and I'm placing my trade on 1 hour. So you begin to look at that. That really also matters. But let's assume that you concluded, okay, we are trading on this 1 hour. Then once you see this signal right there, you see that arrow, you let the arrow closes. You let the arrow closes. Once that arrow closes, then you enter your trade. Don't say, oh, the market is moving down, then you jump, you jump in. The market could be falling. It could start coming down like this. Anything could happen and the market reverse again, and what you think is going down end up to start going back up. Do we understand that? So you let the candle close. This candle closes, then the next candle, you can, like for instance in this situation now, you can enter your trade at the entry, at the opening of the next candle. All your conditions have been fulfilled. The market, the price is below 50 EMA, your candle is bearish, and of course the MACD Pro is bearish, Stochastic is bearish. Now, I also have what I call the perfect entry. If you are my student for a while, you must have heard me saying this. Perfect entry, you can not always go wrong. Perfect entry has over 90% winning chance for you. Perfect entry is a situation like this. As you can see, this 50 EMA, as you can see where this is, it's not far. It's not far from 50 EMA. This is perfect entry right here. Okay, this is perfect entry. This is a perfect entry right here because the 50 EMA and this alarm all sleep on each other. This is a perfect entry for you. Let's come over here. So, for instance, now I will not be entering a short position here. Can I enter a short position in this place, even though the market is down, even though we have the price is below 50 EMA, the candle is bearish. MACD right now, I will not say MACD is bearish. Why? Because you can see 1, 2, 3, 4, 5, 6 or even 7 out of these 8 candles are bullish candles. So from this, I will not be entering a trade right there. Are you guys with me? Are you guys following at all? Are you guys with me? Okay, so I will not be entering a short position here. But in this situation like this place, I will not also enter a trade here because if I'm going to be putting my, we're going to be talking about stop loss in a minute. If I'm going to be putting my stop loss is going to be way up there if I put in entry here. But when you are using, let's say something like this, you see right here, okay, how that cross each other. So you can enter a trade, you know your stop loss is going to be above the highest high before that entry. So Your stop loss could come here. You enter a trade right here. You are risking minimal. Okay, you are risking minimal pips right there. Now, if you come over here, let's take a look. Let me change this to 1 hour. Let me change this to 1 hour. Okay, let's take a look at this. This is what I call perfect entry. Do you see right there? Because, take a look, you have this 50 EMA, you have the arrow pointing down right there. Then, by the time you enter that trade, you know your stop loss is going to come. I will talk about that. Your stop loss will come right above there. Then you have the confidence. This Phoenix is not stopping you from entering your trade because it is not blocking your way. The same thing, this one, if I decide to enter my trade after the close of this candle right there, my stop loss will come above that inside bar while I ride the trend. Are you guys with me at all? If you have any question, please feel free. I've enabled you guys to be able to talk. So that is the condition. We've talked about the condition. We've talked about the entry. Now let's look into your stop loss. How do you put your stop loss? How do you put your stop loss? When the market is trending, up, you are having the highest high, high low, high high, high low. So this is going up. This is higher high, higher high, higher high. Then you are having higher low, higher low, higher low right there. So the same thing, if the market is going up and you want to you are entering a trade, for instance, like here. If you enter a trade in this place, take for instance, you enter a trade in this place. Who can tell us where to put our stop loss? Who can tell us where the stop loss should be? Anybody? Based on what I have said now. Based on what I have said, I believe you guys can talk. Who can tell us where our stop loss will be if our entry is here? Come on, guys. I'm waiting. BJ, I see you. How are you doing?
Yeah, I'm doing good.
Great. Okay. Who can tell us where our stop loss should be if this is our entry in this place? And the reason why I'm putting that entry in that place is because I see this inside bar right there. And of course, the price is above my 50 EMA. It satisfies our condition. And of course, MACD Pro is above 0. That also satisfies our condition. And Stochastic is above 20. That also satisfies our condition. So now we've gone through the condition. We've gone through the entry. So we are at the stop loss. So where will you put your stop loss? Anybody?
Below the bearish box.
Below where?
The bearish box. I have a noise.
This one here?
Yeah. Yeah.
Okay, good. So this can come over here. Yes. So your stop loss will come below right there. So, and the reason why we put our stop loss there is if for any reason the market spark, okay, sometimes it will still come back to retest this point. It will not get to your stop loss. In fact, if you want to play it safe in most of the time, you can even use the ATR stop indicator, which we will talk about later. You can use the ATR stop and your stop loss will be below the ATR stop. So that will be our, so if your entry is here, your stop loss will be here, then your take profit. Now we are going to the T. Remember, we are talking about CEST. Always have that in mind when you want to place your trade. So the condition, you have looked at the condition, is fulfilled. The entry, you have looked at it, okay, like for instance, like here, we have inside bar, we have, this is bullish, the candle is bullish, it's above 50, this is bullish, this is bullish. So the condition also is in place. So the stop loss, we have put your stop loss in place. So where will be your take profit? 3 ways by which you can take profit, even 4 with Tradermatic. The first one is you can do your P2P risk to reward ratio. You can do risk to reward ratio. What does that mean? If I am putting a trade here and my stop loss is here, I can measure how many pips I'm risking. Here, I'm risking, let's say 108 pips, and I measure 108 above. Then that will be my take profit. That is number one. Number two strategy is that I can look into my left, and the next bullish box that I see, I can use that as my take profit. Okay, let me repeat. I will look into my left. The next bullish box that I see, I will use the resistance area. Now we're talking about buy as my take profit. So in this case, this will be the first one I see. So you now have to ask yourself, does this worth it? If that is too close, then you look for the next candle. You look for the next box and you use the next box as your take profit. That is number one. Then number two is you can use all this Fibonacci. You can use this Fibo line as your take profit. So let's say, for instance, if I am entering a trade, I'm going long, I can use, if I don't use it, okay, you see that place, this is the next bullish. So if I don't use this now, I will use that next line. Now, if I don't use that as my take profit, I can use this Fibo line. You see, this is where we are entering. Then this is the next Fibo line. So we could use that one as our take profit. That is the third strategy. The fourth one is that you can decide to do what is called trailing stop. Okay, you can do trailing stop. If what you are risking here is 100, you can decide to put trailing stop to be 100. What that means is that anytime the market moves in your favor with 100 pips, the system will automatically move your stop loss to break even for you, and so on and so forth. So that is CEST with Tradermatic. But anytime you are entering, what your take home should be, this point, am I okay to enter my trade in this place? For instance, take a look at this. There's an arrow here telling you to buy, but will I be buying in this place? Yes or no? Can I place, this is an arrow telling you to buy. Can I put a buy in this place? Yes or no? Guys, I'm waiting.
No.
Why?
As the market have gone so far, consider the stop loss area.
Yes, consider the stop loss area. I mean, you can, if you put right here, your stop loss can come below here, but then look at where 50 EMA is. That has gone way far. Look at your stochastic also. I mean, look at MACD Pro. MACD Pro, you can see something like, I can see something like, I know we have not really discussed divergence, but I can see more of divergence here because this is going down while this is going up. So if you also look at this is going down while this is going up. So I will not be buying because it doesn't congruent each other. It doesn't congruent each other right there. So that is why we will not be buying. And you cannot only just focus on one pair when it comes to trade. If you don't have an opportunity on this particular pair, you can have an opportunity on another one. Does that make sense now? Okay, so let's come over here. Let's take a look. I saw something. I'm just using Euro AUD. We can use any pair. Now, this is the reason why when you are putting your stop loss, I saw something when I was scrolling here. I saw something that I wanted to draw you guys' attention to. Okay, take a look at here. If you had entered a trade in this place, which is a very good entry, the reason why we normally consider the highest high before or the lower low before your entry is because of something like this. You see how the markets move back right there? If your stop loss had been somewhere close here, it would have caught you out. But if your stop loss is somewhere here, then it will still remain in the market. Okay, so you can use you can take a look at any peers, the same strategy apply. This is GBP NZD. So for instance, right now, take a look at this. Take a look on a 1 hour market right now. Can I enter my trade as a short position? Can I enter short? You just open the market, you just open the trade and you see something like this. Can I enter? This is 1 hour. Can I enter short position? Can I enter short right here? I'm waiting, guys. Because this is what makes people to lose trade. When you don't do your analysis and because you just see, it affects me myself. So it's not, I'm not saying this because I'm just the coach. And once you are a Forex trader, will always be a student of the market. So now the question is, looking at this is GBP NZD. Can I enter a short position right here?
I don't think I would. Okay, I wouldn't.
You will not. Why?
Okay, I wouldn't because I can see the market has gone quite far already.
Okay.
And I can also see that the MACD is not really showing me much. You know, the MACD.
MACD is flat.
It's flat. Yes, it's flat for now. But the key reason is that the market has gone quite a lot already. When I look at the FIBO levels as well, it looks like, you know, from the previous swing, it has gone quite far already. Okay. And I'm seeing, and I like the phoenixes as well. They kind of help with the big phoenix, that green phoenix as well, tells me that probably the market is about to reverse.
Okay. Okay. So any other person?
Yes, I said I would go for it because it meets the condition. The price is below 50 EMA.
Okay.
You can see that. And given the 70% chances that it will go short, you see the red candle forming.
Okay.
The next candle forming there.
Okay.
And even though the MACD didn't say much, but it's still the next one forming is I'll consider bearish, and the stochastic is already pointing down.
Okay.
So,
thank you for
overall, because it's probably end of market day, that will make me.
Yeah, let me quickly draw your attention to one statement. Two of you are right. Remember when we're talking about trading, there's no right and wrong. It depends on how you are looking at it and your perspective and the time frame you are trading. But there's a statement that you made right now that I want to draw your attention to, that the MACD Pro didn't say much. And when you are following our check mark, so once the conditions are not fulfilled, just skip it. Once you begin to have the doubt, just skip it. Once the condition is not clear, you know that, okay, this is not, like in this situation now, out of four to go short, okay, we have 3. 1 is actually missing, and that one is the MACD because it's flat right there. Now, another thing you can do in this situation, you can go to, this is 1 hour, you can go to 4 hours on this particular pair. Look at 4 hours, look at what that. So can you still sell on 4 hours?
No.
Okay. So you've seen the bigger picture. Now on 4 hours you cannot sell. So you can go down to 15 minutes. So on 15 minutes, can you sell?
No.
So you see why? So when you just look at 1 hour and you just jump on the trade, that is what makes people to actually, lose trade. So in this situation now, if I go to 4 hours and I want to see what is happening in 4 hours, I can see it's already down here. It's actually at 100% right there. Then we have a pullback. I can zoom out to see what is going on. Okay, even though it's a down market right there, but then when you zoom out, I see on 4 hours, it's not a crime if I go also to daily to see what is happening on daily. So I see the market already touch here. I see the market already touch here. So it will not be an ideal situation for me again to say I want to be shorting this particular pair, because on daily you can see MACD going up. Do we see that? And the stochastic right here is oversold. Okay, it's way oversold. This is GBP NZD. So MACD is going up right here, which is telling us something that we might have a reversal here. We might have a reversal because you can see this particular resistance zone, market has already touched there. If care is not taken, this looks like a double bottom. Okay, this looks like a double bottom. The market can decide to start going up right there. Now, and if you say, okay, you know what, I still want to short this pair, then you are not shorting it on that 1 hour. You can now go to that pair, that 15 minutes. So when you go to 15 minutes, then you will wait for this stochastic to come back up, okay, and give you another signal, and hopefully MACD Pro also must have crossed and possibly start giving you another signal, and hopefully this 15 minutes also must have a serious pullback and give us another signal to go short. But we are not doing it now on 1 hour, we are doing it on 15 minutes. And if I'm doing it on 15 minutes, I will be targeting our last touch here, that maybe the market is coming back to retest that area to form triple bottom. Okay, but in this situation, I will not be putting my short, I will not be putting the short order here, because once you sell, and also look at this Phoenix here. This Phoenix is actually telling you, remember what Phoenix stands for, is actually support and resistance in disguise. So this is telling you, okay, you place this order, forget to. And sometimes when you are not too clear again, you can just change, feel free to change your chart to regular candle and see what is going on. So now this is 1 hour. This is 1 hour. So can you still put a short order here now? Do you see what we are talking about? Can you still put a short order here? No, because this is a grain, as you can see. This is a bullish candle. And if I'm going to be putting any short position, then I will be waiting for this inside bar to break out. And as I said before, then you are looking, because this is daily. Remember, when you are trading with a system like Tradermatic, that doesn't mean that you shouldn't know what is going on the regular candle. So if you take a look over here, if I delete these ones now, this is where the market has been. This is it here. Okay, this is where we are. Okay, this is where we are. I want you to pay attention to that area very well. I want you to pay attention to this area very well. So before I will enter any short position, we have to break out of this two line that I just draw. So what we might have is, we might have this system, this market come back over here. Okay, and if it comes back over here and it's still pulled down, then you can go to a lower time frame to just be part of that small move, which is around 140 pips, 140, 180 pips, which could still be a big money, but not to be placing the short position where the market is right now, because you can see how far the market has gone. So the same thing when you are trading, even though you are trading on Tradermatic, you should have an idea of what the naked chart is doing. Take a look. This is way oversold. Way oversold right there. Then you see this one is also bearish right here, and this is telling you, okay, this is going up. Now the green candle is, the green bar here is telling you, okay, this is going up, and you also see where our 50 EMA is. So this is not a perfect entry situation that we talk about. For a perfect entry that you are looking at something like this. Something like this could still work. You enter a trade over there, you put your stop loss right there, because you know that at least you can, this is also, moving back up, and you see what it did. So that is what I have for you guys on CEST you have to write out the checklist yourself. Then once you write it out, check the condition. Okay, you want to buy, ask yourself, is the price above EMA? Is the candle bullish? Is the MACD Pro bullish? Is the stochastic bullish? So once you write that down, then ask yourself, can this trade now take me to where I'm going? Then the condition to sell, is the price below 50? Is the candle bearish? Is the MACD Pro bearish? Is stochastic bearish? So once you have that, then you go to the entry. Then you go to the entry. Number one, wait and let the candle closes before you enter the trade. You wait and let the candle close, because you can see a market will be going down. A market can start like this going down, and you say, oh, I'm entering short. Immediately you enter short. Even before that candle closes, you can see the market just still go back up. That's why we normally have wick or tail and our candlestick. So you wait and let the candle, you let it close. Then ask yourself another question right there. Is this a perfect entry? Will this be a perfect entry? And now I've explained what I mean by perfect entry. The 50 EMA and your candle and that point of entry, you will see it will align. It's like it's overlapping on each other. So once you have that, you ask that question and you are okay, then you go to your stop loss. That is S, which is now your stop loss. Where will it be? Your stop loss can be below this, has to be below the lowest low before your entry. That is in the case of buying, if you are buying. Or it has to be, this has to be above the highest high before your entry. This is if you are selling. So you look at that. That is your stop loss. You can use the stop loss to, it has to be in that area. Then also look at your risk to reward ratio. 3. Look into your risk to reward ratio. For instance, if my risk is if my risk is 100 pips and my reward that I'm targeting is 40 pips, it doesn't make sense. But if my risk is like 40 pips and I know this trade will give me about 100 pips profit, it makes sense. Then we now look into our take profit. The take profit, number one, we said look into your left and use the next resistance or support box, as the case might be, as your target take profit. And if that is too close, use the next one, which I have explained. Then number 3, you can also use the next Fibo area, Fibo line for your take profit. Or you can use pips to pips, that is risk to reward ratio, to take your profit. And number 5, you can do scaling, trading stop, to take your profit. So this is your CEST. So once you have this in place, I want to believe that this should be able to help you to manage your trade very well. It will help you to check. It's just like you have a combination lock and you want to open a door. Once you have a perfect combination, then you should be good, because that is just what it's all about. You have to be able to manage your risk very well. So for instance, like, okay, this is NASDAQ now. You have to, like, okay, let's say for instance, I want to place a trade. I will not be trading this with what we've discussed indirectly, because this will not give me what I'm expecting. Even though here, this is above 50 EMA, but with what we've discussed right now, if I enter my trade right here, where will be my stop loss? My stop loss will have to be below this place, which is wrong. X, or it could be below this inside bar box, which also doesn't make sense. So you look at another opportunity. It is not a must that you must trade this particular one at that particular time. So then if I'm entering, let's say, for instance, we're talking about perfect entry. This is a good perfect entry example. As you can see, you see that arrow, you see where it says buy. You see, if you enter your trade now at the opening of this next candle, right there, your stop loss come below there, or you can even move it below that Fibo line. You see, this is up, this is up. Then where would be your take profit? Your take profit, according to what we discussed, can either be here or here. Do you see? Because this is the bullish box right there. But then that looks small to me, so I can prefer to use this one. So once you have that in place, that this is 5 minutes, you just know that, okay, you are in good shape. If you are trading, okay, this is a Euro JPY, the same thing, you look into it. Please mute your line. I can hear some baby's noise. Thank you. So the same thing is this. Take a look at this. This is what I mean by perfect entry. This is Euro JPY. Take a look at this. So this here, you have this arrow telling you, okay, you can buy. Take a look at this, even though it's flat, but then the next candle right there, if you can see it very clearly, that is green. And of course, this also is above 20. So like this kind of trade, I will risk it, even though I know this one is flat that much, but then what you are risking is that it's not much. It's not much. As I've said, I lost money myself, okay? And many traders, I've talked to many traders that lost money or lose their account. One of the reasons why people burn out their account is lack of discipline. When we don't use stop loss, we don't follow the rules, we turn trading to gambling, then at the end of the day, we get burnt. But if you can follow this CEST strategy, before you place a trade, you look at yourself, okay, the condition, is it okay? If the condition is not okay, then skip that trade. The market will always be there. And if the condition is okay, the entry, am I entering at the right time? Is this going to give me a perfect entry? You ask yourself. Once your answer is yes, then you go to the stop loss. Where will be my stop loss? Where will be my stop loss? Then you put your stop loss. And where will be my take profit? You put your take profit. We just discussed that we related to Tradermatic, but this can also be used with any system, even if it is naked chart, even if it is regular chart you are using, if it is a price action, if it is FX Sniper, or any of my systems, as long as you ask yourself, what is the condition for me to enter this trade? What will be my entry trigger? What will be my stop loss? And what will be my take profit? Once you have that in place, then you enter the trade. Even if the market, if the trade now go against you and you lost the trade, at least you know that you did what you're supposed to do. Okay, because no matter how much you try, I mean, you can't win 100% of the time, but you put a good money management and risk management in place, and then with that, I believe you should be fine. Okay, any question before we round it off today? Any question?
Yes, Apostle, thank you very much for that session. Just a quick question. You were talking about a day trader using the M5, the M15, and the 1 hour. But I just want to clarify, which of those time frames would you do your analysis on, you know, essentially, and then how do you then go sort of down or up to confirm, you know, those the CEST?
If I am doing day trading, I will be doing my analysis on 1 hour, and I'll be placing my trade on 15 minutes. And if you know, okay, you are okay with 30 minutes, you can do your analysis on 30 minutes and you place your trade on 5 minutes. Now, either of them, okay, is okay, but we'll also want to see what is going on 4 hours, especially for day trader. 4 hours. The reason is simple. You want to see what is going on 4 hours. 4 hours can be down, and you don't want to be against the trend. It's easier when you trade with this trend. So if 4 hours is down, and my 5 minutes or my 15 minutes or 1 hour is telling me to go short, I know that at least I'm in the right direction. But if my 4 hours is bullish and this is now telling me to sell, I have to be very careful and mindful. Does that answer your question?
Yes, it does. Thank you. Thank you very much.
Okay, guys. So once again, I want you to please do back testing. What we've discussed. Do back testing. Do back testing. And you know how to do back testing. Just rewind. Just rewind your chart. Okay, like today now the market is not open. So just rewind. Go back and begin to look at what we discussed. Let's say, okay, for instance, something like this. How will I put, if I put my trade here, this would have been where I put my stop loss. This would have, where will I have been my take profit? These are how then you record. For instance, like this trade, many people will not put this trade. I will not enter this trade because I didn't see my inside bar there for me and so on. So I would have missed that trade. So this is a good trade. If I have entered this trade, where would have been my stop loss? This would have been my stop loss right there. I would have entered this trade right here. This would have been my take profit. You see, this is how you do back testing. This is how you do back testing. You go back, record your trade here. Like something like this. This is a perfect entry right here. Okay, this is a perfect entry right there. You enter the trade there, your stop loss come here. Where would have been my take profit? Of course, my take profit wouldn't have been here. Then you scroll to your left, you look. So you record. If you do 100 trades, how many would have been a win? How many would have been a loss? This is how you do back testing. Then once you enter that, you now enter a trade. At least you boost your confidence because you know that the system you are using is right.
Tradermatic, making trading fun, easy, and profitable. Visit www.tradermatic.net to get your copy at 80% discount today.